Welcome back, everyone, to another episode of Trade by Numbers. Oh, if you are new to the channel, my name's Josiah and I trade stocks and cryptocurrencies for a living. And if you hate making money, this is not the channel for you. If you like making money, if you like learning about stocks, crypto, and investing, you want to learn how to become financially free, be sure that you hit that subscribe button, hit the notification bell, and don't forget to hit that like button. Show me some love. Let me know that you enjoy these videos. So let's talk about it. We got the FOMC minutes released today. I have not read all the way through them. However, I did catch the news where they talked about them a little bit, and that was pretty interesting because we seen right in there that some of the Fed is wanting to push for a 50 basis point hike instead of a 75 basis point hike. Now, that was before we got a strong jobs report. That was before we got the CPI numbers out. After getting that new data, I can only imagine that's only going to strengthen their case for a 50 basis point hike. You got to remember, when the Fed had their meeting, we did not have the new CPI numbers out. So they was going off the fact that the previous CPI numbers had shown that we had dropped 0.6% in a single month, and they was expecting at least another 3 the following month, and we only got a 0.1% drop. So considerably less than what they were anticipating. Jobs market come out stronger than they anticipated. We got consumer spending higher than they had anticipated. All this is strengthening the case for that 50 basis point hike. Now, the Fed don't meet until close to the end of March, which means we should get another CPI report out and another jobs report out. Now, those could help the case for them to back off a little bit, or they could strengthen that 50 basis point even further. Now, I don't necessarily expect that they'll do 50 basis points at this point, but what they could do is extend out and do more rate hikes, which would be just as bad for the market as if they just go ahead and rip the Band-Aid off, do the 50 basis points, and start getting that under control. We've talked a lot on here before about, they have to give these things time to work. And, in my opinion, time is all that they need at this point. But they're going to keep pushing until they see the back of inflation broke. And that could mean that we could be looking at a 50 basis point at the next meeting, or at the very least an announcement that they're going to continue doing these rate hikes further out than what we are currently anticipating. Either way it goes, not good for the market, and this is what I've been waiting on. This is what I've been calling for the last couple of weeks. I've been expecting to see the market start to turn down given the data that we've seen. However, the bulls have been pushing, saying no, doesn't matter what the data is. The Fed has come out and they've started talking dovish. They didn't have this data when we started hearing that. So this confirms that the Fed's going to have to pay more attention and get a little bit more hawkish, and the market's going to have to start pricing that in, which is why I've been telling everyone, be careful, don't get caught in the trap. The market did react to it a little bit. I'll be honest, it held up much better than I expected. We ended up with the S&P closing just 0.14 down. We ended up with the Dow down by 0.26, and the NASDAQ was actually in the green by 0.13%. Now, that's just barely kind of squeaking out pretty well flat, but when you consider the fact that the markets was down over 2% yesterday, technically they should have got a pop and been at least 0.5% to 1% in the green today, and yet we still closed in the red for the most part. That's not exactly a good sign. That definitely sets us up for a week where we could see continued downward pressure. So either way, we're going to have to keep playing it out by ear. However, we made some good money today. Not going to complain about that. And now that we've got the Fed minutes out and have an idea where this market's going, we can make sure and set ourselves up appropriately. And if this market gives us a pop, we know that we've got a good position to be able to get in there and short, because we do know kind of ultimately where the market's going at this point. Don't get out there and get yourselves caught up in the trap. Like I said, we have a clearer direction. Of course, the market can do anything. Nobody's got a crystal ball. But with the information that we're getting now, I think that there's a really good case to see the S&P come down and at least test that 3,900. And I've been saying it needs to come back and test 38, and that's still where I see this going. We're going to have a little bit of time for it to get there. It doesn't mean it's going to crash overnight, but we're going to keep an eye on it. We're going to play our positions and watch very carefully. We made a fortune today on Coinbase. I was watching Coinbase today. Crypto was down, yet it had run up. The market was down. I shorted it, bought some put options, and man, it crashed down. Those put options made me over 120% today. Absolutely excited about that. I hope you were in on the run. Don't forget about the giveaway that we're doing. Be sure and keep voting on that. I'm going to get you a link out starting tomorrow where everyone can get in and start participating in the Jumpstart program. So be blessed, and remember, never trade with your emotions. Always trade by the numbers.